Here's a summary of the Microsoft FY2026 Q1 earnings call transcript, presented for easy reading. Intro. Good afternoon, and thank you for joining us today for the Microsoft Fiscal Year 2026 First Quarter Earnings Conference Call. On the call with me are Satya Nadella, Chairman and Chief Executive Officer, and Amy Hood, Chief Financial Officer. Overall performance and key highlights. We had a very strong start to our fiscal year. Microsoft Cloud revenue surpassed $49 billion, up 26% year-over-year. Our commercial RPO increased over 50% to nearly $400 billion, with a weighted average duration of only 2 years. We're seeing increasing demand and diffusion of our AI platform and family of copilots, fueling our investments across capital and talent. This quarter, revenue was $77.7 billion, up 18% year-over-year. Gross margin percentage was 69%, slightly down year-over-year due to AI investments, but this was partially offset by efficiency gains. Operating income increased 24%, and earnings per share was $4.13, up 23%. CEO's Vision. Satya Nadella. Satya Nadella highlighted a planet-scale cloud and an AI factory approach, emphasizing innovation across their AI platform and copilots. He noted the mutually beneficial partnership with OpenAI, with Microsoft contracting an additional $250 billion in Azure services. Satya stressed their rapid infrastructure build-out, aiming to increase total AI capacity by over 80% this year and double their data center footprint in the next 2 years. He stated, "We have the most expansive data center fleet for the AI era, and we are adding capacity at an unprecedented scale." He also emphasized the development of Azure AI Foundry to help customers build their own AI applications, noting, "We offer developers and enterprise access to over 11,000 models, more than any other vendor." The widespread adoption of first-party copilots, now surpassing 150 million monthly active users, was a key point, with Microsoft 365 Copilot adoption accelerating rapidly. Satya expressed optimism about the future, stating, "Our planet-scale cloud and AI factory together, with copilots across high-value domains, is driving broad diffusion and real-world impact." CFO's financial details and outlook. Amy Hood. Amy Hood provided a detailed financial breakdown. She confirmed that Q1 results were not impacted by the new OpenAI deal signed this week. She reiterated the strong revenue growth of 18% and highlighted that operating margins increased year-over-year to 49%. Capital expenditures were significant at $34.9 billion, driven by demand for cloud and AI offerings, with approximately half dedicated to short-lived assets like GPUs and CPUs. Cash flow from operations was $45.1 billion, up 32%, and free cash flow increased 33% to $25.7 billion. Commercial bookings increased an impressive 112%, significantly ahead of expectations, driven by Azure commitments and large contracts. Microsoft Cloud revenue of $49.1 billion also exceeded expectations, growing 26%. For the second quarter outlook, Microsoft expects revenue of $79.5 billion to $80.6 billion, representing 14% to 16% growth. They anticipate cost of goods sold to grow 21% to 22%, and operating expenses to grow 7% to 8%. Operating margins are expected to be relatively flat year-over-year. Specifically for Intelligent Cloud, Q2 revenue growth is projected to be approximately 37% in constant currency for Azure, with demand remaining significantly ahead of available capacity. They expect to remain capacity constrained through at least the end of the fiscal year. For productivity and business processes, revenue growth is expected to be between 13% and 14%. And for more personal computing, revenue is expected to be between $13.95 billion and $14.45 billion. Key financial metrics summary. Revenue. Q1 FY26 $77.7 billion, plus 18% YOY. Microsoft Cloud revenue. Q1 FY26 $49.1 billion, plus 26% YOY. Commercial bookings. Q1 FY26 plus 112% YOY. Commercial RPO. Q1 FY26 $400 billion, plus 51% YOY. Gross margin percentage. Q1 FY26 69% operating income. Q1 FY26 plus 24% YOY. Earnings per share. Q1 FY26 $4.13, plus 23% YOY. Capital expenditures. Q1 FY26 $34.9 billion cash flow from operations. Q1 FY26 $45.1 billion, plus 32% YOY. Free cash flow. Q1 FY26 $25.7 billion, plus 33% YOY. Management's forecasts for future quarters. Q2 FY26 outlook. Total company revenue. $79.5 billion to $80.6 billion, 14% to 16% growth. Intelligent Cloud revenue. $32.25 billion to $32.55 billion, 26% to 27% growth. Azure revenue growth. Approximately 37% in constant currency. Capacity constrained. Productivity and business processes revenue. $33.3 billion to $33.6 billion, 13% to 14% growth. More personal computing revenue. $13.95 billion to $14.45 billion. Significant risk factors identified. Capacity constraints. The ongoing demand for AI infrastructure, particularly GPUs and CPUs, is exceeding current supply, leading to capacity constraints that are impacting Azure's growth potential. This is expected to continue through at least the end of the fiscal year. Customer concentration. While RPO is broad, the significant contractual commitments from large AI partners, like OpenAI, raise questions about concentration risk. Management emphasized their strategy to build a flexible, planet-scale fleet to mitigate this. AI investment pace. Substantial investments in AI infrastructure, talent, and product development are impacting gross margins. The company is closely monitoring the monetization of these investments and ensuring demand remains strong. Market dynamics and competition. While Microsoft is well-positioned, the rapidly evolving AI landscape and the emergence of new technologies like AGI, artificial general intelligence, are areas of continuous monitoring and adaptation. Data center build-out and finance leases. Significant capital expenditures are allocated to data center expansion, including large finance leases, which require careful management and long-term planning. Lowlights. Slight gross margin decline. Gross margin percentage decreased slightly year-over-year, primarily due to increased investments in AI infrastructure and the growing usage of AI product features. Capacity limitations. The ongoing shortage of AI capacity is a constraint on further growth, particularly in Azure. Gaming revenue decline. Gaming revenue saw a slight decrease year-over-year, impacted by a strong prior year comparable. Most important statements from CEO and CFO, Satya Nadella, CEO. We have the most expansive data center fleet for the AI era, and we are adding capacity at an unprecedented scale. He also emphasized their platform strategy, stating, Microsoft is a platform company, not just a hyperscaler. He further elaborated on their confidence in future monetization. The combination of high-value agent systems and the efficiency of our fleet reinforces our confidence to invest in both capital and R&D talent to seize these opportunities. Amy Hood, CFO. Demand signals across bookings, RPO, and product usage are accelerating faster than we expected. We're investing in infrastructure, AI talent, and product innovation to capture that momentum and expand our leadership position. She also highlighted their cautious approach to large contracts. The CPU and GPU and the storage gear doesn't come into play until the contracts start happening. So you get a lot of lead time in being able to say, oh, what's the status? Conclusion. In closing, demand signals across bookings, RPO, and product usage are accelerating faster than we expected. We are investing in infrastructure, AI talent, and product innovation to capture that momentum and expand our leadership position. We remain focused on delivering real value to our customers that results in durable revenue growth for the long term.